Morning, good afternoon, good evening, wherever you are watching me from. This is another accounting section with Mem Tutu. Today we are moving on into the next topic in the ATP, which is cost accounting. Cost accounting. Now, what is the word costing? Costing can be described as the value placed on the use of resources with the aim of making profit. So the cost of making something is what we call costing. And then what is cost accounting? Cost accounting refers to all costs incurred in the production of a particular product or in the provision of a service. Now, we have different type of businesses. Of course, we have trading businesses like Pick and Pay, like ShopRite, and the likes. We also have service businesses, businesses that are meant to render service for people, just like the hospital, the private school, the private hospital, the private law firm, and the likes. So also we have manufacturing companies, manufacturing businesses. These are businesses or companies that produce whatever they sell. These are businesses that produce whatever they sell. Example is Albani bread. Those ones they produce, they bake, and then they sell. So those are the kind of company we are looking at their accounting records. And then for the purpose of this topic, you need to familiarize yourself. You need to familiarize yourself with certain key words. There are certain key concepts that you are going to be hearing. We'll repeat them over and over looking at this topic. The first one is what we call direct material cost. Direct material cost. What is direct material in its own? Direct material are those materials that form a part of the what? Of the product in question. Direct material are those materials that form part of the product in question. For example, you pick a bread. When you pick a bunny bread, you will find those things you can see, feel, or taste in that product is the direct material of that product. If I ask you now, what are the direct material you think you find when you hold a bread? Yes, you are so correct. The flour, the water, the yeast, all those things are the direct material. And the money we use in buying these things that we call, these materials is what we call direct material cost. Direct material cost. Then we have what we call the direct labor cost. Direct labor cost. The direct labor are those workers that they are directly involved in the act of production. The direct labors, again, I say, are those workers that either touch, mix, or do one thing or the other on the product in the factory. They are directly involved in the production process. And the money we pay these workers is what we call the direct labor cost. And then we have prime cost. Prime cost is the addition of the direct material and the direct labor. The addition of the direct material and the direct labor is what we call the prime cost. And after that, we have what we call factory overhead cost. Factory overhead cost. This includes every other cost apart from direct material and direct labor. Every other cost incurred in the factory is allocated to factory overhead cost. I repeat again, factory overhead cost is every other cost. Factory overhead cost is every other cost allocated to the factory as part from direct materials and direct labor. Under factory overhead cost, we have indirect materials, we have indirect labor, we have factory rent, we have factory depreciation for equipment, we have factory sundry expenses, and the list is endless. So every other cost incurred in the factory, apart from direct material and direct labor, is charged under factory overhead cost. And then we have what we call total manufacturing cost. Total manufacturing cost is the addition of prime cost and factory overhead cost. Remember, we said prime cost is the addition of direct material cost and direct labor cost. So it means that total manufacturing cost is the addition of direct labor, direct material, and factory overhead cost. And then we have what we call work in progress. Work in progress. These are products that the factory is still working on. They are not raw materials and they are not yet finished products. The factory is still working on them. So we call them work in progress. Now, there will be some amount of product or amount of material that the factory worked on last year and we are not done with them last year. Those materials or those products, those semi-finished products, will become our work in progress at the beginning of the current financial year. I repeat, those materials or those semi-finished products that the factory are still working on at the closure of last year becomes the opening working material at the beginning of the current year. And of course, those materials we are unable to finish this current year will become our closing work in progress at the end of this year. So the closing work in progress at the end of this year becomes the opening work in progress for the next financial year. Now we have what we call finished goods. These are goods that have been produced. They are ready for sale. They are ready for use. So finished goods is the final product from what? From the production process. And these are goods that are ready to be sold. Then we have total cost of production of finished goods. Our total cost of production of finished goods is the reason why we draw our cost statement, our production cost statement. That is the reason why we draw it. We want to see our prime cost plus our factory overhead plus our work in progress at the beginning minus our work in progress at the end. Then we get the total cost of production of finished goods. And of course, we have what we call cost of sales. Our cost of sales is the cost price of the exact product that we have sold. The cost price of the product that we have sold. And that is me for today. We have just gone through the main concept of cost accounting. Of course, please feel free to ask questions. Feel free to subscribe, share, like, and encourage the tutor. Thank you for now. See you in the next episode. Bye.